Good morning. It's Wednesday, the 13th of December here in London. This is the Bloomberg Daybreak Europe podcast. I'm Caroline Hepker.
And I'm Tom McKenzie. Coming up today, UK GDP shrinks by more than expected as the country's economic headwinds grow.
COP28 ends with an agreement to transition away from all fossil fuels for the first time.
Plus, Netflix and Spill, the video platform, reveals full details of who watched what for the first time.
Let's start with a roundup of our top stories.
Here in the UK, the economy shrinking more than expected in October as elevated borrowing costs took their toll. GDP fell by 0.3% month on month, following a gain of 0.2% in September. Bloomberg's senior UK economist Dan Hansen says the figures are the latest indication that the economy is increasingly feeling the effects of 14 consecutive interest rate hikes.
Everything is moving in the right direction if you're thinking about the inflation picture and bringing inflation down. But I think the bad news story here is that it's going to come potentially at a cost. And that's what the data this morning tells us.
Dan Hansen and the team at Bloomberg Economics reckon the economy is already in a recession that will last through the middle of next year.
Meanwhile, on the politics, Rishi Sunak has survived a vote on his Rwanda deportation bill, a test of his authority. He's survived at least for now. The policy to send asylum seekers to the African country passed by a majority of 43, with 37 Tories abstaining. The Conservative MP Ian Duncan-Smith backs the deal, but now wants changes.
There are debates around here about certain clauses where there may be some open possibilities for people to make continuous vexation claims. So, lots will be looking at whether it's feasible to kind of tighten that bit up.
Ian Duncan-Smith is part of a faction on the right of the party who could veto the legislation next year. But any changes would aggravate Conservative moderates, meaning more internecine strife is likely for Sunak over his flagship policy.
Now, the COP28 summit has ended in a deal to transition away from all fossil fuels for the first time. The agreement calls for countries to quickly shift energy systems away from fossil fuels in a just and orderly fashion. While the outcome falls short of the phase-out most countries wanted, it does break new ground. No previous COP text has mentioned moving away from oil and gas.
Germany's ruling coalition has sealed an agreement on a revised 2024 financial plan after the latest round of talks that stretched into the night. Olaf Scholz's three-party alliance has been grappling for weeks with the turmoil that was triggered by last month's ruling by the country's top court limiting the use of off-budget funds. Bloomberg's Germany correspondent Oliver Crook says that the government may be running out of options to plug their budget hole.
We're trying to plug 17 billion euros, which is a substantial sum of money. And there are only so many ways you can do that in a government budget, right? You can cut spending, you can cut subsidies. This is something that the Greens and Scholz would be sort of against. And Scholz, even over the weekend, saying that there will be no dismantling of the German welfare state.
Oliver Crook there reporting from Berlin. Now, the shock judgment by Germany's Constitutional Court upended the decades-old practice of using special pots of money, and it also called into question tens of billions of euros in debt-financed spending.
Argentina, meanwhile, has devalued the peso by 54% and announced massive public spending cuts. The moves are part of new President Javier Milei's shock therapy program for the country's economy, which is battling an inflation rate north of 140%. Economy Minister Luis Caputo made the announcement in a televised address.
The official exchange rate is going to go to 800 pesos so that the productive sectors have the right incentives to increase their production.
The dramatic first steps by Economy Minister Luis Caputo follows a sombre inauguration speech on Sunday when President Milei warned that Argentinians will have to endure months of pain while he works to pull the country out of its economic crisis.
Elon Musk's X, the social network formerly known as Twitter, is expected to miss its own ad revenue goals. According to people familiar with the matter, the platform is on track to earn roughly $2.5 billion from advertising in 2023, a big drop from sales of more than $1 billion per quarter in 2022. Bloomberg social media reporter Kurt Wagner says that Musk's conduct is a key issue for past advertisers.
I think the issue here continues to be that, Musk seems to not really be aware that his own behavior is having this dramatic impact, or if he is, he just simply doesn't care. But I think that's really the issue more than anything, is that he's not really giving advertisers a good enough reason to come back. They're trying to move away from this kind of legacy brand business that Twitter used to have, right? And that's partly because I think it's inconsistent and it's moving because of Elon's behavior, right? So the more they move away from the Disneys of the world or the Coca-Colas from the world, then they get to either small and medium-sized businesses, subscription revenue, data licensing. That stuff's just not going to be as impacted by the CEO's behavior.
Kurt Wagner there. Well, he added that X is looking for earning opportunities less likely to be influenced by the actions of its owner. The news also comes as another Musk-led venture, SpaceX, announces that it will sell insider shares at $97 each in a tender offer. That's a price increase which boosts the value of the space and satellite company closer to $180 billion, indicating strong investor demand.
Now, Netflix is telling the world how many people watch its shows for the first time. Bloomberg's Charlie Pellet has the story.
The company has released global mid-year viewer data for every title on its service. The first of what Netflix says will be regular reports. The political thriller The Night Agent was the most watched title globally in the first half of 2023, generating 812.1 million hours of viewing. That was followed by Season 2 of the family drama Ginny and Georgia, and the debut of the Glory, a South Korean series. Ginny and Georgia delivered the biggest audience if you consider all seasons of a show. In New York, Charlie Pellet, Bloomberg Radio.
OK, let's get back to the UK and the economy, specifically the data that came out earlier this morning showing a contraction of 0.3%, so a bigger slowdown than many had expected. The details then from our senior UK economist, Dan Hansen. These, of course, were the data points that came out for the month of October. Dan, what's your reading of this data? What does it tell us about where we are with this economy?
So I think when it dropped this morning, I was obviously surprised by the weakness. We expected a 0.1% drop, which is what the consensus was as well. And it sort of beat all economists' expectations in terms of how negative it was. I mean, I think the thing that struck me, though, when I opened the release was how broad-based the weakness was. The few sectors that did grow, notably health, is one sector that you can't really rely on to sort of sustain a recovery and sustain growth. It's a lot to do with what's going on with strikes. It's a lot to do with what's going on, getting into the weeds here a little bit, what's going on with the test and trace and vaccine programs. But I think the broad picture, the broad takeaway is that services, manufacturing and construction all fell. And you've got weakness across the board.
OK, how significant is that when we think about recession risks for the UK, whether we're in a recession or not?
So look, I mean, I think we've been having this conversation for a while, haven't we? And I've said on numerous occasions that I feel that the line between stagnation and contraction is a fine one. It's going to remain a fine one probably until the second half of next year, when I think there are reasons to think the economy will pick up a little bit. But nonetheless, I think, at least for our call, and Tom and I spoke about this earlier, but at least for our call of having some modest contractions in GDP over the next few quarters, this obviously is completely consistent with that. I mean, and one thing I just mentioned as well is that the third quarter was flat, but if you looked at the details of that, domestic demand fell considerably. We were only saved by this big fall off in imports, saved from a contraction. So I think, like Tom's point, that we've been stagnating for a while, that's absolutely right. I think there is definitely a risk, though, around the turn of the year that we get a very mild, just to emphasise, mild fall in GDP.
OK. The Bank of England, of course, meeting with its next decision on Thursday. Most people don't expect any change. Do you think, though, as you look into 2024, it changes your estimates as to when the BOE goes with cuts and just how deep those cuts could be?
Yeah, I mean, just on Thursday, that's tomorrow, isn't it? Yeah, it's tomorrow. So we've got, you're absolutely right. There's no chance of them moving. I think what could move the dial is the data today could move the vote, potentially, to make it a more dovish split. It's quite possible Megan Green joins those who don't want to hike rates anymore, and you only have two going for another hike. But to go to your question, Tom, I think Our call is for a first cut in August, and now that balances two things. One is the weak economy, but of course the other side of all of this is sticky inflation we've still got that here in the UK. I don't think that story's gone away. I do think there is a risk, though, that the Bank of England is more sensitive to downside news on the economy, and it brings the first rate cut forward, and it also cuts more aggressively. Now, how much further forward could it be brought? I don't think it could be brought forward much more further than May. And I think there are two reasons for that. One is there's going to be quite a bit of, hopefully, good news on CPI in the April and May reports that'll give them basically a green flag, because inflation will probably drop to 3, maybe 2.5 if with a fair wind. And also they'll want to see the March budget and the extent to which Jeremy Hunt loosens the fiscal purse strings.
In terms of sequencing and impact, today's Fed decision day, how much of an effect does that have on the UK, given what is priced in for rate cuts out of America? Yeah,
I mean, there's always the risk. And this was the case in 2021, right, where you had everyone thought the Fed would have to go first. And the bank surprised everyone. The Bank of England surprised everyone by, first of all, not hiking in November 2021 and then hiking in December. And so they went well before the Fed. So I don't think there is a reason to think that just because, say, the Fed cuts for the first time in March, which is what our US team thinks, that puts a lot of pressure on the Bank of England to bring things forward. But they'll have a watchful eye on it. Of course they will. But I think the justification for all of this is the inflation picture. The US is more advanced in the disinflation process. We know that. And we're not going to get a 3% handle on inflation probably until the spring, maybe summer. So, and that's really what the Fed's now got in its hand. It's had a few of those prints. So it's just a slightly more advanced story in the US, and that gives them a little bit of space to go earlier.
OK. Senior UK economist Dan Hanson with the analysis of that growth data for the UK, what it tells us about the trajectory of this economy looking into 2024 and indeed the decisions of the Bank of England. Thank you, Dan.
Let's turn our attention to COP28, the climate summit, shall we? They have agreed a deal to transition away from fossil fuels this morning. It is the first time that this sort of language has actually been included in nearly 3 decades of climate talks. And Bloomberg senior climate reporter Akshat Rathi has been at the meeting and joins us now. Good to have you on the programme, Akshat. What exactly has been agreed then?
Well, as you said, there are a number of things that have been agreed, but the thing that has made the headlines, rightly so, is that it's the first time transitioning away from fossil fuels has been mentioned at a COP meeting, and that's been agreed on by 200 countries. Now, the science has been clear that it's fossil fuel burning that is the cause behind climate change. But countries have resisted to come to a consensus because, of course, there are many fossil fuel producers whose economies would be hurt if they move away from fossil fuels. And so to come to Dubai, the sort of heart of the Middle East, where oil and gas production counts for majority of government income, it is a stunning development to have a language agreed by all countries, including Middle Eastern countries, that the world is ready to transition away from fossil fuels and to do so in this critical decade.
Actually, talk to us about how significant or robust this commitment actually is.
Well, United Nations climate summits put out statements that are quite high level. The only way they become really actionable are when governments take those high level comments and make them policy at home. We saw that after the Paris Agreement was signed in 2015, it took a couple of years before net zero by 2050 became a rallying cry, getting all the global economies, at least the major ones, to sign up to that target, and getting companies, boardrooms, interested in understanding how governments now are going to set this target and how they should also be setting a target for net zero by 2050. So what this language around transitioning from fossil fuels will do, as Jennifer Morgan, the German climate envoy, told us, is that it gives a signal to the market that investment in renewables is what is going to be profitable in the long term, and that investment in fossil fuels, at least new ones, could lead to stranded assets.
That is pretty decisive, isn't it? And pretty fascinating. And yet, of course, the difficulties of getting follow through. Have the people participating in COP28 sort of abandoned the idea of reaching a kind of limited target of 1.5% degree warming, a limit to global warming. Are they sort of accepting of the fact that looks pretty difficult to reach now?
Well, as the president of COP, Sultan Al Jaber, who's also the chief executive officer of Abu Dhabi National Oil Company, said the North Star for this COP was to keep 1.5C alive. Now, does it do it? Maybe, because it's definitely not off the table. There are certainly loopholes in the text. There is a role for gas that has been accepted in the text, that gas may be used for longer. When it says transitioning away from fossil fuels, it does so only for the energy system, which is about 3/4 of the emissions. So oil and gas could be used in fertilizers and plastics. So there is still some concern, and rightly so, from many of the scientists and green groups. But it is also to be recognized that this is historic progress when it comes to COP meetings. Usually, you don't get even a mention of the word fossil fuels. And now there's a clear signal that the world is ready to end the fossil fuel era.